Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago with October 2012 Managed Futures Update. Let's face facts, October was a profoundly difficult month for the managed futures industry. Most people say that sharp risk trend reversals, especially in metals and in equities, kind of carried the day for losses for most managed futures programs that are out there. I want to encourage you, though, to just think of the reasons on why you allocated to managed futures in the first place, as opposed to why you might perhaps want to get out of managed futures altogether or just write them off. The first is portfolio diversification. We all have to remember that a properly diversified portfolio by its very nature is going to look different than one that's not diversified, especially in the short term. History has shown that over the long haul, a properly diversified portfolio will potentially lower portfolio vol and enhance returns over the long haul. Secondly, broad diversification. Keep in mind that when you have managed futures in your portfolio, you're allocating to perhaps 100, maybe 125 different asset classes around the world. These are all exchange traded. These all have separate trends over the long haul. So you're diversified amongst things that you could never get access to otherwise. Thirdly, I'd like to say that we, in the managed futures industry, we are allocating to what I would think are best in breed managers. These are managers that over the long haul have shown to just provide excess returns in different asset classes, but again, it just relies on trends and it relies on an investable period. But these are people, these are organizations that are focusing on various asset classes that are exchange traded around the world. Lastly, managed futures over the long haul have the potential to do well in any market environment. We simply should not look at managed futures to be a silver bullet for crisis environments only. It is true, managed futures have shown to be negatively correlated in times of stress, but they do have the potential to add a positive return in any market environment. I do hope these last 4 bullet points have helped you. Just keep in mind why you're allocating to managed futures in the first place. And on behalf of SFG Alternatives, I look forward to talking to you next week as we dig just a little deeper into the managed futures industry.